Uber signaling it could break even or turn an adjusted profit in the current quarter ahead of schedule. In an 8-K filed earlier this morning, the company said it reached adjusted EBITDA profitability in July and August. It says it believes that it is heading for a break-even third quarter and up to $100 million in adjusted EBITDA in the fourth quarter. Joining us right now in an exclusive interview is Uber CEO Dara Khosrowshahi. And I don't know if you remember, I remember very well, the day of the IPO, sitting outside of the New York Stock Exchange, I said to you, when are you going to reach profitability? This was the question. And here we are sitting together now. And who would have thought it would have happened in the midst of what is still, to some degree, an ongoing pandemic?
Yeah, it's amazing how the world changes. But I think the really great thing about Uber is the flexibility of the model. And actually, here we stay, here we are, still in somewhat of a pandemic. And our gross bookings levels are 35 to 40% above the IPO. And we are very clearly on the path to profitability. So super proud of the team for what they've accomplished, but we got a lot of work ahead of us.
But explain what's happened here, because obviously this is ahead of plan, or at least ahead of plan after plan.
Yes.
Given what's happened in the world.
Well, what we did was early on, we identified our need to bring on more drivers to the platform. So in the second quarter, we really leaned into supply, especially in the United States, to reinvigorate our driver base and grow our driver base in the U.S. And we're seeing that now, the benefits of that early investment in Q3. The business in terms of volumes, we had our best week ever last week. The service in general, surge levels are coming down. ETAs are at their best levels since the beginning of the years. The service itself is getting better. It's still not where we want it to be. And as a result, margins are coming to what they have been on a historical basis, both on the ride side and on the Eats side, actually. The core Eats business, we believe in Q3, is going to be close to break even or profitable. And when we have both our rides business performing at really high levels and our Eats business performing, you get to a good place. How
much of a function in terms of that margin is a function right now of surge pricing? You know, during the commercial break before we joined, I joked, not so much though, that, when I get an Uber, I almost have to, mortgage my home because of the surge. And sometimes it's extraordinary. It's 2-3 times what you think it would normally be. So how much of that is representative of the margin, and what happens over time when hopefully you get back to a normalized?
So surge pricing isn't about margin. Surge pricing is about balancing supply and demand.
Right.
When we surge, the driver typically gets their fair share of the surge. So it's about making sure that in areas where we got more demand than supply, we attract drivers to those areas so that surge pricing goes down. And we're seeing now surge pricing essentially at its lowest level since May and moving down as well. We're not where we want to be. But the margin situation is just much more because supply and demand are much more in balance now. Really, in the past 2 weeks, we've actually signed up 5% more drivers onto the platform. So the flow of drivers onto the platform is quite positive because the earnings opportunities now are pretty extraordinary. You can earn $35 an hour completely flexibly, working whenever, wherever you want. So that's a pretty attractive proposition.
So $35 an hour today, how does that compare to, let's say, 24 months ago? What would a driver have made then?
It depends on where they're driving, but it is elevated. It's probably 20-30% above where it has been historically. And I think it's a real question mark as to what the cost of labor is going to be going forward. I think the good news is that our system is showing that it can adjust one way or the other. It can operate in a high-cost labor market, as we are now, and we're delivering best weeks ever. In a lower-cost labor market, prices come down and the system adjusts.